Start the question. The statement of financial position, MCS Limited, statement of comprehensive income, and the additional income. So first step, we draw the format. Right? Statement of cash flow, 31st March 2016. Right? Then we will start with additional information. Right? We'll do the workings. After that, it's easy for us to do the cash flow statement. Okay. So we can start with the PPE. Depreciation for the year ended 31st March, which was included under administration expenses, was 1 million. So on administration expense, there is depreciation of 1 million. Total 1.5 million. Out of that, 1 million is depreciation. Increase in revaluation reserve account was on account of revaluation of land on 31st March 2016. An office equipment with a cost of 400,000 and a carrying value of 80,000 as at the date of disposal was sold for 30,000 during the year. So these adjustments are related to the PPE. So let's start with the PPE adjustment. Opening closing balances given here. So here, since they have not given the accumulated depreciation, we don't need a provision for depreciation account. Right? We don't need a provision for depreciation account because you can't do it without accumulated depreciation. So this is PPE book value. PPE at book value. Right. So all the depreciation and everything will be recorded in this account. Depreciation, purchases, disposal, all will be recorded in the PPE account. Opening balance. Balance brought forward is 7,000. Closing balance is 12,000. Opening balance 7,000, closing balance 12,000. And other transactions in this account can be and disposal, and also purchases. New purchase of PPE. These are other transactions in this account. And since accumulated depreciation is not given, right? Depreciation also will come under the PPE account. Now let's do the transactions. Depreciation for the year is 1 million. Depreciation is 1,000. There is also a revaluation. Increase in revaluation account was on account of revaluation of land. Now, there is a revaluation reserve account. There is 500 increase. Opening balance is 2000, closing balance is 2500. So that is because of the revaluation of land, revaluation profit. So we recorded the depreciation and the revaluation of the land. Then the disposal. An office equipment with a cost is 400. The carrying value. Carrying value means the book value. 80. So carrying value 80 means the depreciation is 320. Then only carrying value becomes 80. What is the disposal profit or loss? What is the disposal profit or loss? Tell me the disposal profit or loss. How much? Is it 50? Profit or loss? How much? So we transfer the carrying value 80. $80 will be transferred to the disposal account. And the sales proceeds. How much we are selling? We are selling at 30. We are selling at 30. So 80,000 worth of asset. If we are selling at 30, that means there is a loss of 50. There is a loss of 50. 80,000 worth of equipment. If we are selling at 30, there is a loss of 50,000. Now the difference in the PP account is the purchases. How much is purchases? What is the purchase? Credit side total is 13,080 minus how much did we buy? 5,000. 5,580. file, you have to credit the net value because the PP account is maintained at the book value or carrying amount. So when you are transferring, you can't transfer the cost. You can transfer the book value, only the book value. Right. So here we need 4 transactions: depreciation, cash, this cash, and so these are the 4 transactions, 4 entries that comes for the cash flow statement. Let's go to the cash flow statement and record under adjustment. Depreciation will be added. 1000. Depreciation will be added. And there is a disposal loss. $50 will be added. Disposal loss also will be added. Then investing cash flows. Purchase of PPE. So I must explain proceeds from disposal of equipment. How much did we receive? We received 30,000. So these are the 4 transactions related to PPE. Transactions related to PPE. Then operating profit and sales for the year 5,000 to 5.2 million, 13.5 million. Total assets 15 million 750. Actually, these information were given in order to calculate the ratios, right? So we are not calculating the ratios now. So we can complete the rest. Okay. So taxation. Income tax payable 400 and 200. And here we have income tax. Expense for the year is 1,000. How much is the tax payment? How much is the tax payment? Opening balance is 200. Closing balance is 400. Profit and loss 1,000. So the difference is cash. 1,200 minus 400 is 800. So that's the tax paid. Let's also do the income interest expense. Opening balance, closing balance, profit and loss, and the cash. There is no opening closing balance in the statement of financial position. No opening balance, no closing balance. Profit and loss is given. Finance expense 600. Therefore, cash also same. Expense, payment both same. If there is no closing balance or opening balance, the expense and the payment both are same. So let's record here. Interest expense will be added. Interest expense 600. Interest paid minus 600. expense plus expense will be added, and then payment will be deducted. The tax paid also we calculated, it's either it's minus. Interest paid 600, tax paid 800. Let's go back to the question. Profit before tax. Profit before tax is 4,000. So let's take all the other tax. Profit before tax. 4,000. Then changes in working capital. Inventories, trade payables, prepayments, trade receivables and trade payables, and also accrued expenses. Inventories, receivables, payables, prepayments. There are 4 items. So what happened to the inventories? Inventories increase. Increase in inventories. How much is increase? 8,150 minus 6,250. 1,900. So asset negative relationship. Trade receivables also increased by 600. Increase in trade receivables. Prepayment also increased. Trade payables, that is also increased. Then that's the plus. 2,300 minus 2,050. Now let's do the remaining balances in the SLP. Non-current asset V2. Cash and cash equivalent, that will be taken as opening and closing balance. So this is this plus then accrued expense also. There's accrued expense That is also working capital. Increase in accrued expense. Accrued expenses increased by 250. Next, here we will take working capital, all the current assets, current liabilities, other than cash. We have to take all current assets and current liabilities, including prepayments and accruals. We didn't take interest and tax because interest and tax we have to show separately. That's why we didn't take here. All other expenses and income we have to take. Prepayments, accruals, we have to take. But as we have stated capital, there is no change. Retained earnings. Now, like earlier, we'll do this. Retained earnings, opening balance is 3,150. Closing balance is 6,150. Net profit is 3,000. So is there any dividend payment? 3,000 plus 350 is 6,150. So there is no dividend payment. Right. So that also there is no cash flow in retained earnings. But borrowings, it has increased. Obtain interest bearing borrowings. $2,000 increased by 2,000. Cash and cash equivalent beginning of the period 3,450 minus 150. $3,300. End of the period 1,800 minus 300. So answer should be 1,500. Once we calculate the answer, this should be 1,500. What is PPA? Okay, so that's all we have. Calculate the final answer. Is that 150? 150 is bank overdraft. Because when you are calculating the, like earlier, the note We are taking the note. Like 2015, 2016. Cash in, cash and cash equivalent. Three 450,800. Bank overdraft minus 150 minus 3. Overdraft means it's minus. So this is the balance. Opening closing balances. So 3,300 is the opening balance. 1,500 should be the closing balance. Calculate and see. You don't need to consider the other things in the income statement because you are starting with profit before tax. So before that, all the transactions we have adjusted. Inventory related adjustments, credit sales, credit purchases, payables, prepayments, all adjusted here. So nothing to do with this cost of sales and other distribution administration expenses. You have to show cash and cash equivalent. This better to show this note. Like taking all the cash and cash equivalents. So net cash flow from operating activities, investing activities, and financing activities. How to identify cash and cash equivalent? Cash and cash equivalent means the cash balance, the bank balance, short-term investments, bank overdraft. Those things. The short-term, highly liquid assets. Where did I get 600 interest paid? So from the interest expense account. Yeah. interest expense. There is no opening closing balance. Only the profit and loss amount is given, which is 600. And the payment also same. Expense, payment, both are same amount. So net increase or decrease is minus 1800. The final answer is 1500. So 1.5 million is the final answer. Any questions? Interest bearing borrowing means interest paying loans, long term loans, where you pay an interest, where you pay a fixed interest, interest bearing borrowings. So change in cash and there is a question. The change in the cash and cash equivalent should be equal to the net value of all the activities. Yeah, all these activities plus this opening balance should be equal to the closing balance. So you should set the closing balance as 1500. That's the closing balance. Okay, so that's how we prepare the cash flow statement direct method, indirect method. So what do is any other questions? Did you all understood this? How the cash flow statement direct method? This is very simple if you know the process now. Indirect method is very simple. Get the profit before tax. The main adjustment, as I said, it's the PPE adjustment, right? Calculating the depreciation and disposal profit, cash, those things. This is very simple and easy when you compare with final accounts and other questions. Okay. Now what I'm going to do is the same question. Let me do in the direct method. So in direct method, calculate the cash direct method. We need working to find out the cash received from the debtors, cash paid to the creditors, and the payment of operational expenses. So let's draw the ledger accounts for trade receivables, payables, operating expenses. Operating expenses has admin and distribution. Can you do this working? There is a question. From where do we get entry for interest bearing borrowings? That is, here, interest bearing borrowings is given here. The non-current liabilities 5,000, 6,000, 7,000. Opening 5,000, closing 7,000 means that we have obtained 2,000 loan. You need to have purchase details. So purchases also you need to find out because cost of sales is given. You have opening closing balance, closing inventory balance. Identify the purchases. From the purchases, you identify how much is paid to the trade payables. Complete trade receivables, opening balance, closing balance, sales, and cash. Trade payables, opening balance, purchases, operating expenses, opening balance, should prepay. We need to find out how much is cash paid. Right. So here one more thing. Now we need to find out the cash payment. Therefore, depreciation should be deducted. Or you can deduct the depreciation here. Without depreciation. So direct, indirect method we did. Direct method, what you need is how much is received from debtors, how much is paid to creditors, how much expenses is paid. Interest paid and tax paid already we have calculated. And take the same balance, 600 and 800. So we need to find out the cash generated from operations. Trade receivables. Opening balance 1,400. Closing balance 2,000. Sales 12,000. Then we can get the cash received from the debtors. Cash received from the debtors 11,000. Trade payables 2,050 opening, 2,300 closing. Purchases, we need to find the purchases from the cost of sales. Opening inventory 6,250. Closing inventory 8,150. Cost of sales 5,000. $6,900. $6,650. Expenses. Prepayments 200. Opening 700 closing. Accrued expense 750. Opening 1,000 closing. Then the profit and loss. Administration expense is distribution of 900, admin of 1,500. We have to deduct the depreciation. Depreciation is 1,000. So 900 plus 1,400. Since depreciation is not a cash payment, we deduct. Yes. Yes. I'll explain the operating expense again. There is a uh, prepayment 200, opening and closing 700. Accrual 750 opening and let me take it like this. I'll take the total expense here, so it will be clear. The total expense we have profit and loss, distribution, $900, right? Distribution 900, admin is 1000. Okay, and when you are calculating the cash in these two, distribution and administration expense, right? In this distribution and administration expense, there are non-cash amounts. So those non-cash amounts we have to remove from the account. One is depreciation. Depreciation is 1000. And there is another one. There was a disposal. Loss. There was a disposal loss of 50. Here we calculated disposal loss. That is in the other, that is also in the expenses. Right. So that has to be tested here. So 3,850 minus 1,600. So here 1,750. So you get the same answer. Cash generated from operations. Cash generated from operations 3,150. In this question, now normally the loss on PPE that should go to the other expenses, but here there is no other expense in the statement of profit and loss. So we assume that they might have taken that somewhere here. That is why I deducted from the expenses column. Expenses. Definitely not in the finance expense, so it should be in between the gross profit and operating profit. So you get the same answer as before. Everything else is same. This part is same. So in operating expenses, administration and distribution, what you have to identify is how much is cash paid, right? So first you take opening closing balances. This opening balance and the closing balance. You can take this, right? Prepayment debit, accrual credit. Then the amounts in the profit and loss. Profit and loss debit, this is credit. Then the cash payment. To identify the cash payment, there are non-cash items. So those non-cash items you have to deduct. You have to debit and take the difference as the cash payment. That's how we do the calculation. Right.